yeah, it's not about missing the move. It's about catching the best one. Price is squeezing and squeezing and squeezing, or coiling up more and more and more. Yeah. Daily time frame shows that even better. That we can just go like this and we can go like that. That means violence is coming. We have bullish CVD divergences at the moment, especially this year, and it's going to hit both sides sooner or later. Yeah. Which one first doesn't really matter. It depends on who messes up first. Let's get cooking.
Before you continue, please pause the video and read this trade disclaimer. None of the information contained here is financial advice. This is only for educational purposes.
So here we have Bitcoin, then S&P 500 and NASDAQ. That goes US dollar index. Very interesting. Euro and GBP we can look at. Gold and Ethereum. And Bitcoin. Now we go to the yearly time frame. So what has changed on the yearly time frame? Nothing. That yearly level has still, been backtested as resistance. The previous year high has been lost. The only thing that right now is a little more positive or bullish is the fact that the candle is green. In other words, the yearly open is below price. But the rest looks like a standard textbook rejection heading for lower. Yeah, that's all you can say from this candle. Monthly level wise, we still have a similar story. Monthly level up here, price rejected from it last month already in January, and so far this month, nothing. Yeah, it's basically at the monthly open. The amplitude is super small. Look at the previous candles. This one was very small. September, October, very large expansion. November, a lot less, but still not bad. December too. January had a lot of movement, ended up at the same place, but a lot of movement. And look at the amplitude so far for February. And it's the 7th day already, yeah? So it spent a week basically doing nothing. That means price is coiling up so that the shorts and the longs get wrecked before the next move. Okay, and the next move could be a fatty like this one, for example. Doesn't have to be, but the more you coil, the better expansion that can come afterwards, the more violence can follow. So weekly time frame, just crystal clear and clean. It doesn't change, does it? So that's the upper weekly level. That's the lowermost available weekly level, will be that one. This one is untapped. It was front run, and this one has been tapped. So I'll take the next one because it's fresh. 41,580, 43,925. These are still the areas of interest that I would like to see visited. Up or down doesn't really matter to me, because both can give me an opportunity to rotate to the other side. In other words, if it goes up and hits this, then I can look for weakness to head to this side. That's one way to see it, just within the range. If it heads down and hits this one, then I would look for strength to take it to the other side. That's it. Just pure range rotation idea, because we're still inside the range. Now, if you want to break out of the range, then you have to, show it clearly like this by flipping resistance to support and making a new high. That would be strength, at least locally speaking. And weakness would be losing this one, backtesting it as resistance and moving lower. So this week is in the middle of this range and completely stuck and within the amplitude of last week. So this week price is squeezing and squeezing and squeezing, or coiling up more and more and more. Yeah? Daily time frame shows that even better. That we can just go like this and we can go like that. That means violence is coming, and it's going to hit both sides sooner or later. Yeah. Which one first doesn't really matter. It depends on who messes up first. So if a lot of shorts open at the lows, then the top. Then short squeeze to the top, hit the top and then the bottom. If a lot of longs open at resistance, then the other way around. Yeah, just whatever wrecks people the most. But it really doesn't matter in the end. You know that this mechanic is the same as always. Yeah, over and over and over. That there's expansive phases in the market where price really, Bollinger Bands, everything wide, and there's phases where everything squeezes up again. And those are the phases where open interest increases, usually, or builds up, ideally, because impatient market participants are opening shorts, longs, shorts, longs, shorts, longs, shorts, long, and the amplitude is smaller, 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 smaller. Everybody wants a swing trade, and then it goes boof, and nobody has a swing trade, but a very hurted account. It's not even a real word, is it? But it's fun to say anyway. So if you're scalping, that's a different story. Why? Because scalping means point A to point B. No rocket to the moon dreams, no fantasies about 10K, none of that stuff. Yeah. Point A to point B. In, out, money in the bank. In, out, money in the bank. So bottom level, very, very nice, that daily level. up here, they've all been already visited. So I don't expect anything special from these. So you can use them as reference. And since we don't have a fresh daily level to the upside, then I would say daily open gives you a good idea of what's going on today, above it or below it. Previous day high, previous day low, you can also use, but the previous day low is basically the daily level, so you can leave that. One is enough. You don't need 10,000 things on your chart. That just makes everything worse, not better. And that's it. What is this? We're closing in to the apex of the triangle, so there is absolutely no reason for me to enter a trade right now. Because it's Wednesday, and it's New York, and we got opening bell session. We have bullish CVD divergences at the moment, especially this year. That dip right there, that is really, really clearly a lower low. And this is clearly a higher low. I mean, it didn't really go that far, just a little bit. It's still, everything is internal. That's the problem. It's not really expanding outside of this coiling area. But yeah, brought you to the 786, comes back, fine. Bullish CVD divergences again on this one. Yeah, look at that. Boom, boom. And this is a higher low. So we do have some aggressive shorts here. There. Okay, that's not that much. But here, 10 million. 10 million short. You see the 10 million shorts open at the bottom, they get punished. Another almost 10 up here longs opening up, plus a few that follow. To the downside, yeah? So it's continuous punishment. And this is an important point I want to make. It's going to be rough. It's going to be nasty. It's going to be challenging. It's going to be nerve-wracking and account destroying if you don't play it safe. Yeah. So rather miss some moves now and have fun later, or enough capital later on your demo account for an easygoing wave 5. The trending phases are very easy because you're in and then you just let it go, basically. Yeah. These phases are rougher. So this is where you really, really test your limits. And for now, use the demo account, I'm not kidding, to try what you think is right. And then you will have, on paper, in front of your eyes, the proof of whether you can do it or not. Yeah, so this is the chart, and then you go to trading panel here, bam, you hit paper trading, boom, connect. And then it'll make a, if you don't have one, it'll make a paper trading account with your username, paper trading. And then you have an account balance. I don't know what, I think it starts with 100,000. And there's no limits, basically. You can use as much position size as you want and everything. So it's a bit crazy, but it should kind of make sense to the account size. If you're trading with like 5 million position size on a $100,000 account, that's unrealistic. Yeah, the account can't handle that. You can check account history and stuff like that. This was from last Wednesday. So you can use this paper trading account to see, you know, what was your average price, how much you're in. You have a nice overview of what you've been doing. You can use that for training, and it feels like the real thing. Yeah, of course there's no real money on the line, but it's still very nice mechanical training for your brain. Like when you go to the gym and train, you know, muscle training, it's the same thing here. So you're just training the process. That's the important thing. You know? Oh yeah, see, now the trade buttons appeared here, so you can change your position size. This is now set at 7 BTC, but you can put in whatever you want, and then you can buy and sell, or you can just right click, trade, create new order, and here you can set your orders. Yeah, and that's paper trading. That's it, man. I mean, if you definitely want to do something, but you don't want to risk your capital because you're like, and then just give it a try on this, and you'll see, and you'll have the proof to yourself, whether it works or not. Yeah, and build up statistics. Not just one lucky trade, but many.
Elevate your mastery in trading. Join the Safehouse Vanguard today.